Well, friends, welcome back. We'll continue our fourth session. So far, we have understood the nature of auditing, objective of auditing, and scope of auditing. We'll continue with the scope right now. Give me a minute. In the meantime, I'm trying to share the screen with you. Yeah, I think screen is visible. Previous session I had discussed, I broadly explained you how scope is important. Give me a minute now. Yeah. And we are discussing about this chart that the scope of audit should cover all the aspects, and auditor should ensure the reliability and sufficiency of information. There should be proper disclosure, and accounting system needs to be properly evaluated, tested. If required, inquiries and verifications can be conducted. Accounting records needs to be compared with source records, and with specific attention to judgment areas, policies, classifications, consistency should be followed, proper disclosure should be there. Auditor should not venture into anything which is beyond his scope of competence. And there should not be any constraint on the scope of audit, because constraint on the scope of audit may lead to issuing an disclaimer of opinion or qualified opinion. So that those kind of constraints should be avoided. Now, friends, we'll be discussing this area that how scope is determined. So mostly, the scope of audit is determined by three things. One is terms of engagement. It depends what kind of engagement terms between auditor and the client. Requirement of relevant legislation. Law also defines legislation, or law also defines the scope in some areas. Pronouncements of the institute. Here, institute means Institute of Chartered Accountants of India. When you're coming to the statutory audit point, company statutory audit, only chartered accountants they can do the statutory audit of a company. So pronouncements of the institute, that is the standards of auditing, or let us say guidance note, or clarificatory notes, etc. They also plays an important role in determining the scope. But here you have to remember these terms of engagement cannot restrict the scope prescribed by the legislation or institute. Okay, certain additional things may be covered in the terms of engagement, but that cannot restrict the scope which is provided by the relevant legislation or pronouncement of the institute. Okay, the scope should adequately cover all aspects of the enterprise, right? And other things you already know. So these are the three things which determine the scope of audit. Okay, in order to cover the scope or cover the entire aspect of the audit, auditor need to assess the policies for selection, or you can say to cover the scope, auditor assesses the selection and consistent application of accounting policy, the manner in which the information has been classified, and adequacy of the disclosure. So these things need to be assessed by the auditor. How accounting policies are selected, whether they're consistently applied or not, how the financial information are classified, and how they are disclosed. These things needs to be assessed by the auditor. Okay. Are you getting? Are you getting up to this?
Yes, sir.
Okay. Now, As you know, auditor needs to ensure that the financial statement should show true and fair view. And auditor also recognizes that because of test nature and inherent limitations of the audit, together with inherent limitations of internal control, there is an unavoidable risk that material misstatements may remain undiscovered. So initially, when we were learning about the objective of audit, I had told you or we had discussed that one of the objectives is to ensure that the financial statements are free from material misstatements. That means they should not contain any material misstatements. So auditor should ensure that there is no material misstatement in the financial statements. But auditor also recognizes because of test nature. That means auditing is such a thing that the techniques that you apply, through that techniques you will be testing certain things. And through that testing, you cannot get an absolute assurance that something is 100% correct. Right? Let us say you want to do the vouching. You can do the vouching, but even after doing 100% vouching, you will find you cannot give a guarantee that there is no material misstatement. And many cases, you cannot do 100% also. You have to selectively test some certain things. Let us say on a particular test, you can check the cash balance, but you cannot check it on daily basis. Right? Maybe all the among so many vouchers, you may select 1 month voucher or 15 days voucher to do a thorough vouching. Okay, but that is again a test nature of the technique. You cannot cover 100% of the transactions. So because of this test nature and because of other inherent limitations of the audit, auditing has also got certain inherent limitations. We'll be learning what are the inherent limitations. That means nobody can help. These limitations will be there. Okay. And there are also some limitations of the internal control. We'll be learning also what are those limitations of the internal control. Okay. Inherent limitations of audit, inherent limitations of the internal control. And nature of the audit is that test nature. So because of this thing, there is always an unavoidable risk that some material misstatements may remain undiscovered. So even if you have done a proper audit, there is a possibility that some misstatement may remain undiscovered. Nobody can give guarantee that all material misstatements are discovered. Okay. But here you have to remember discovery of material misstatement by management. Sometimes what happens that often rise during conduct of the audit. But actually that discovery is not the main objective of the audit. Main objective of the audit is to express an opinion whether the financial statements are showing true and fair view. Financial statement may contain some misstatements, but still it may show true and fair view, provided these misstatements are not material. Okay. So accordingly, what auditor does, auditor plans, auditor designs his audit program in such a way that material statements more or less will be detected. But in case for some reason it is not detected, you cannot say it is a failure of audit. Okay. So therefore we say audit cannot be relied upon to ensure discovery of all frauds and errors. There can be some frauds and errors which auditor may not discover because auditor's program is not designed to discover error and fraud. Auditor program is designed to get a reasonable assurance that the financial statements are showing true and fair. Okay. But where auditor has some indication of error and fraud, he may extend the audit procedures. But if there is no such indication, the normal audit procedures are not designed to discover errors and fraud. Okay. Are you understanding this thing? Are you getting these points?
Yes, sir.
Yeah. So here our point is that as an auditor, one should recognize that the nature of the auditing is of test nature, and there are some inherent limitations of the audit. There are some inherent limitations of the internal controls also. Because of this thing, there is always an unavoidable risk that some material misstatements can remain undiscovered. Something may remain undetected. Okay. With this, our scope of audit part is over. We'll be coming to next area, that is various aspects of audit. Here also one by one we'll be discussing. Okay. So you can say aspects to be covered in audit. These are the, you can say 11 aspects are listed out. What we'll be discussing how to cover this aspect. We already know what is the scope, what is the importance of the scope, and what are the limitations of audit. We have seen, and what is the impact of these limitations on audit. We have already discussed that. Now, what is the first point on this aspect? Can you read it?
Examination of system of accounting and internal control, appropriateness, proper recording.
Okay. Here what happens? This is one of the important aspect of the audit. When you start the audit, it is expected that you should examine the system of accounting. Right. So system of accounting needs to be examined, which thoroughly you have to understand. You have to invest some time to understand what is the system of accounting. If there is some loophole, there is some error, you have to find it out. You note down, this is how accounting system operates and these are the loopholes. And also internal controls, you have to study what are the various controls involved in this process. Right. For every transaction or in any flow of transaction, the organization must be having its own internal control system. Right. Okay. And appropriateness and proper recording, whether this accounting system and internal control system are appropriate to the situation, considering the size of organization, considering the nature of organization, considering the people involved. Okay. And whether this kind of controls are okay, are they proper fit? Right. And are they properly recorded? So this is one of the important aspects. Your program should definitely cover all this. How you can cover? So you need to understand, first of all, accounting process. You need to understand the internal control system. Is it not?
Yes, sir.
Okay. Suppose you want to verify purchase system. You need to understand what is purchase accounting and what basis purchase is accounted in this particular organization. And what are the internal control system? Suppose internal control system, there has to be purchase budget. Okay. Whether that is followed or not, whether budget provision is there or not for purchasing this thing, or there is a purchase committee who has to approve of purchases which are of more than let us say whose value is more than 1 lakh rupees. Whether all such transactions where this approval is required, they have been approved or not. There are certain internal controls designed by the organization. Is it not? Or purchase has to be made from selected or from listed vendors. That is their internal control system. You cannot purchase from anyone. Some listed vendors are there, approved vendors, you have to purchase from them. These are the internal control system. One has to understand fast. Some organization, they might be having their purchase policy, purchase guideline, or purchase manual. So transactions has to happen like this. Similarly, there might be sales guideline. So they contain various internal controls. So as an auditor, one needs to understand or examine the system of accounting and internal control system. Once it is done, the next what he has to do, second point. Point 2.
The review of system and procedures, adequacy, weakness.
Yeah. Review of system and procedures. Let us say system we have understood. Is it adequate? Or do you think it is adequate considering the importance of the transaction? Or there is some weakness in the control? Okay, there might be certain weaknesses in the control. Control may fail to operate in certain situations. Okay, so that also needs to be reviewed. That needs to be noted. Okay, did you understand these 2 points?
Yes, sir.
Okay, so in case you find any point is difficult, please ask me. I'll be trying to explain you with the help of some examples. Third one is checking arithmetical accuracy. This is also important. Okay, the calculations, etc., should have been made correctly. So auditors should also cover that aspect. Arithmetically, things should not be wrong. So these we are learning the various aspects which should be included in the audit. Right. So arithmetical accuracy aspect has to be also included. Then point fourth,
Verification of authenticity and validity of taxation.
of transactions. Right. So transactions are authentic and validity. That also one has to see. According to the rules and regulations of the organization, whether this transaction is valid or not. Suppose I am saying it is sales, it is a valid sales or not. Suppose it is a purchase, it is a valid purchase or not. Purchase orders might have been issued. Some evidence should have been there. Proper authorities must have approved for that thing. Or it is a genuine purchase, not just a book entry. That aspect also should be covered in audit. Point 5.
Ascertain distinction between revenue and capital items.
Yeah. So you see, revenue items and capital items are different. Revenue items are basically expenses or incomes, which are reflected in your statement of profit and loss. Capital items are reflected in the balance sheet, right? So it depends organization to organization. It depends that type of business they're doing. On that basis, certain items will be regarded as revenue items, certain items will be regarded as the capital item. Accordingly, classification should be done properly. Okay, suppose one repair maintenance item. Repair maintenance is a revenue item. Normally, it is understood. So it should be charged an expenditure. But if it is capitalized, if it is treated just like construction of a building, then that is a wrong entry. Is it done? So that means what has happened? A revenue item is treated as a capital item. Reverse may also happen. Suppose a computer printer has been purchased. So actually, purchase of printer is a capital item. Is it done? But let us say it is booked as repair and maintenance, it is charged to expenditure. Then what has happened? And capital item is booked as a revenue item. Is it done? So your audit should cover this aspect also. If something is some kind of transaction has happened like this, your audit should find out. Point 6.
Comparing balance sheet and PL with other statements.
Yeah, other related statements also needs to be compared with. Suppose you are saying sales this month. You can very well compare the sales figure with GST return. Is it not? You are showing TDS. Maybe compared with TDS returns. Okay, salary may be compared with the salary register. Is it not? So like this, various other statements are also available, which can be compared with the balance sheet and profit and loss statement. Point 7.
Verification of title and existence of assets.
Suppose an asset is there or not, you need to verify its existence. How can you verify? In your program, you can plan for a physical verification. You may say you will physically go and see that asset. So that will ensure that asset exists. But what about title? It asset might be existing, but might be existing in different person's name. So you have to collect some evidence that actually this organization is the owner of that asset. For example, for vehicle, you can call for RC book. For land, you can call for land documents. Right? For building, you can call the ownership documents. Okay. So like this. So you need to verify the title and existence of the asset. Now, next point.
Verification of liabilities.
Liabilities are the amount payable. So one has to ensure actually that much is payable or something more is payable. You may plan, you may ask for balance confirmation. Selectively, party-wise, you can ask for balance confirmation to ensure that actually that much of liability is existing. Right? Point number 9.
Checking the results in statement of profit and loss, true and fair.
Yeah, you have to see the results. Results might be profit or loss. You have to see that is correctly computed. All the figures are correctly taken. Depreciation amount is properly computed, considering the assumptions or estimates regarding life of the assets. Provisions are correctly made. Then only you can see the results which are showed in the profit and loss statement are correct. Point 10.
Confirming the statutory requirements.
Confirming the statutory requirements, meaning all statutory requirements related to financial things, related to financial item has to be compliant. Let us say TDS has to be paid by 7th of the next month. You have to see that is a legal requirement. Okay, or PF money has to be paid by 15th. So that one has to see that statutory requirements are compliant or not. Okay, and reporting to appropriate person or body. So auditor report in the when I showed you the audit report, you have seen it is addressed to an appropriate person. Is it not? So in this case, in statutory audit, it has to be reported to the shareholders, to the owners of the organization. So these are the aspects. These are the aspects minimum one should cover in an audit. So let us say you are conducting audit of an entire organization. So you have to design a program in such a way that everything is covered. Okay, then you can say your program is comprehensive. Okay, did you understand?
Yes, sir.
So now you can see the auditing is not limited to arithmetical accuracy. It is not that you will only do the vouching. That means financial statement will tick up with ledger from ledger to vouchers. It's not like this. It's not limited to arithmetical accuracy. You have to see that all the transactions are properly authorized. There should be authority to the transaction. If transaction is not authorized, it is invalid transaction. Right? And the form in which accounts are drawn up are prescribed by law. As you know, for a normal company, Schedule 3 suggests the format of financial statements. So it needs to be presented in that form. Okay. So in different organization, formats are different. Let us say for a electricity company, for a banking company, formats might be different. So accordingly, financial statement has to be prepared in the format which is prescribed by the law. Insurance company balance sheet is also different. So that also auditor has to see. Okay. Okay.
Yes, sir.
Now you see, before you this slide is there, just discuss. I'll be asking you one by one how you will be planning an audit. Let us say now you have seen all these aspects has to be covered. Is it not? In your audit, if you are
Yes, sir.
ignoring a particular aspect, that means your audit program is insufficient. First, let us say what is your plan? How you will do examination of system of accounting and internal control. You need to examine it there so that you can find out its appropriateness and proper record. Tell me how can you do it? How can you evaluate the internal control system? What is your plan? Can you tell me? You can simply do one thing. You may discuss with people that explain me what are the accounting system, how transactions are generated, how you record one by one. You need to understand various steps. Okay. If it is a computerized system, you can take screenshots, how transactions are recorded, how vouchers are entered, how approval is happening. So you note down all these things through which only you'll be understanding. Is it not? Note down how things are happening. Next class, I'll be showing you practically how these things are done. Okay. Practically how it is recorded and what is the internal control system. You can ask them what are the checks and balances, how many people are signing, who verifies all these things. Okay, let us say some goods are purchased. Maybe at the entry point, security might be checking it. After that, quality people might be checking it. Might be after that, might be going to the stores. They might be verifying. So like this, various kinds of internal controls are there. So you need to note down. Okay, then only you will be able to review the system and procedures whether it is properly working or not. You may test some transaction, right? Let us say there is a system that anything that comes through comes as a purchase should be routed through stores. But you find out some examples are there which are not routed through stores or not routed through security gate. So you can find out some loopholes. Then you can say, you see, system is inadequate. There are certain weaknesses in the system. Okay. Checking arithmetical accuracy. Practically, you can do some computation, cross-check certain figures, find out if there is something wrong. Authenticity and validity of the transaction. You see different kinds of approvals. Okay, you may refer to delegation of power, who can do what. You can find out some invalid transaction, so you can express your dissatisfaction. This transaction is unauthentic. Consequently, financial statement may not show true and fair. Capital and revenue item distinction. When you do the vouching, you can find out some items which are capital but treated like a revenue item, or which are revenue item treated as a capital item. You can point out all these things. Okay, comparing balance sheet with other statements, that is also practically you can plan that exercise, compare with various other statements. Then verification of title and existence of the assets. I had already explained you how to do that. Verification of the liability, maybe through balance confirmation, maybe from accounting records. You can see it. Checking results of profit and loss statement. Confirming the statutory requirements. Okay, various laws. You can prepare a checklist of statutory compliances, and accordingly you can report to the appropriate person. Did you understand?
Yes, sir.
Okay. If I give you a task, that keeping in mind the aspects of audit, you have to design an audit program. Can you do it?
Sir, we require one example. Like first, you can show how
Yeah,
to
example I
make
will
the
be
example.
definitely showing you, but right now at this stage, what I'm doing purposefully, I don't want to show you. Okay, I'll be showing you in the next class. First, you design it, then you will bring a refinement in that. Are you getting?
Okay, sir, we'll
You
try.
think I told you these are the things which has to be covered. Practically, there is no standard format of audit program. Okay, it varies from farm to farm, people to people. I'll be showing you the best program, what is the requirement, but that is subsequent to this. First, you design your program. Your plan is like this. Other things can be added. I told you these aspects has to be there. If these aspects are not there, might be your program is insufficient. Okay, I'm showing you a sample audit program. Today you see how programs are drawn up. After that, again, I'll be explaining the other things, that how this system understanding part, how you uh, assess the internal control system or the financial system. First, you watch this. Are you seeing it?
Visible, not visible, sir.
What file right now? It is not visible now.
Sir, it's just blank. Nothing is visible.
Okay, let me try again. What you are seeing on the screen now?
Black screen, sir.
Black screen. You are not seeing anything now?
No,
What?
sir.
No?
No, sir.
Wait a minute. Wait a minute. Are you seeing my video now? Am I visible to you?
No,
No,
sir.
sir.
No.